Wednesday, January 3rd. Market analysis, Stan Ehrlich. Good morning, 10 o'clock in a minute or two California time, a little bit past the middle of the trading day. We have a further decline today. That top that I've been talking about, and it's not a major one, minor, for a few weeks, seems to have come to pass, and that was starting basically on Friday last week, and then a follow through on Tuesday, as you can see yesterday, and a significant amount more today. Now, today's lows basically are at the lowest lows for the last about 2.5 weeks. And in the case of the March E-mini, which we're looking at, it's also the beginning of some support. I got to point something out, and it'll be on another chart on the daily data relative to RSI. I think it was the QQQs, but we'll see in a minute. I think we're going to see the lows broken that were on December 20th and come down to the bottom of this little trading range support area. But there's a good possibility that the next level down, which would be at 4,650-ish, could very well be tested. And one more lower than that would be about 45.96. So in those price levels, I would look for the market to start to show signs of turning back up again. I have no intention of becoming very bearish for any length of time whatsoever, only for a few more days, and it might be a week or two, which of course is ruining my Santa Claus rally. Looks like this year is going to be a failure. So this is the March E-mini, and I don't think the bounce we're having momentarily is going to go very far for very long. Next is the S&P 500 daily data chart. And here we have something very, very significant. The high in the last few days has been right up there, almost exactly the same highs as the beginning of January of 22. And that was the beginning of the bear market of 2022, which ended on October 13th, with a bullish engulfing ER buy signal, of course, at the bottom. Now, that is a whopping important resistance area, and it has stopped this rally, including a bearish engulfing ER sell signal, which again did not work on December 20th. But these signals are sometimes part of the topping out process and not always the highest high like we had on July 27th. An excellent, but not quite the highest high on April 5th of 22. The bottom of the market on October 13th of 22. And there are others examples too, but those stick out, and they are the highest or lowest lows at the time for significant moves. So we haven't broken the low of December 20th for the spider yet, but we're getting awful close. And the high we've had is not to be ignored. That important level here at 470, what was that high on Friday? 477.5, let's say. That was going to be important in the near future. Breaking above that on a closing basis could explode price levels up to the upside for a couple, 3 days maybe. So this is a whopping big, important resistance level. Zooming in on current. So we have a gap to close, and I'm not sure we're going to get that low, but it would be at 441.5. I'm more inclined to believe 454 and a small change. And we're at 70, 16 cents lower, dollars lower, not that big a deal. Several days. Next chart. 5-minute S&P, nice rally at the moment, but on the 5-minute basis, the RSI just got up to about 83. That's probably it. Rally probably over for the moment. And you can see on this 5-minute chart that we've got a few weeks. There's the low on the 20th of December. And most of the lows are just a little bit higher, including today's low. So the area that we have come down into is relatively short term, last 2.5 weeks or so, of support. Breaking that is going to cause another stair step down of, I'm thinking, 5-10 points. So that's what I'm looking for, right around the corner here. Next few days to a week or so. DIA, very, very significant. Bullish engulfing yesterday, but I've mentioned in the past many months that if you have an outside up day and you're overbought and it appears to be a possible top of a market, meaning there's other reasons to believe it'll turn down. I kind of nickname this a bass-backwards reversal. I'm not sure what to make of it, but it is an outside up day candlestick in overbought conditions. Normally, an outside up day in oversold conditions would be like that green, bullish as heck. And that one, bottom of the market or very, very close to it. So reasons to believe it's coming down a bit more. Next is the Russell daily data, and I'm going back to 2015, about 9 years worth. Look how important that red zone is that was around 160. And ever since June of 22, over a year and a half ago, we had bounced off of that zone or a little bit higher several times, including bullish formations and big reversals, et cetera, et cetera. Lately, we punched up into new high ground for over a year. Yeah, a year and a half, maybe a year and 3/4, and started to come into a different resistance area. So this correction it is currently having was not unexpected. And we're already closing a little bit of a gap here. So the gap closes the first thing at 193.66, give or take a tick. And next is some support level a little bit lower. And then there's other reasons to believe that lower levels are going to hold this market. And I just don't see any big, huge downside correction. Next, QQQ. Overbought again, like the others. One bearish signal, part of what is now past tense to top. Yesterday, we already made new lows and a new low close for a couple, 3 weeks. Today, we're following through, and we're actually trading right now below yesterday's lows, down 281 momentarily. The high we just had was in new high ground historically. That's the highest high the Qs have reached in history just a couple days ago, and it's failing quickly. Not a good sign momentarily, but I can't really pin something super bearish long-term on it. So where are we going here? First of all, we did leave a little gap behind above the market. Interesting. From yesterday's high to the day before's low, that would be Tuesday, Monday, Friday of last week and Tuesday of this week. That's where the gap is over the New Year's weekend. Okay, good support starting in the ballpark of around 390. Better as you touch these other red levels on the way down. An old gap tried to get closed like here. Partially, yes, but it just took off. So will it get closed completely sooner or later, like now? Maybe. It certainly is a good support area if we can get that low, which I have some iffy questions about. I think really the best support is going to be 387.88-ish. Next chart. We got the NASDAQ March already leading the way down, and the Qs probably going to bottom out before anything else does, going down too fast, too quick. I'm noting that the RSI is not that low on the charts, so we do have elbow room from an RSI standpoint, and I'm looking for lower levels into the support area. And the DIA 1 minute chart, 5 minutes, sorry, holding relatively well. Here's the QQQ 5 minute. Look how much downside it's already had, well below the lows of the 20th. Let's go to the Santa Claus rally, which ain't happening this year. The last trade that we now have on the books is currently a loser, and it is the highest entry of the three, and the others lost money. This morning at 6:45 a.m., we got out of our second entry, and it was a small loss, but a loss, and it was a little bit of a larger loss than the first entry and exit, which was on Tuesday morning at 6:45 a.m. California time. So tomorrow morning at 6:45 a.m., we're getting out of our last Santa Claus rally according to my rules. And I doubt sincerely we're going to have a big enough rally to turn the whole thing profitable. You got to make up for the two losers. That would be making new highs for the whole darn move pretty much overnight. I don't see that coming. In fact, I think it's going to get a little worse. Just my opinion. But that's what I'm thinking. Okay, so Futures, futures, futures. Now, the E-mini from a little bit different perspective. Looking for a test of support. Probably halfway down in this downside correction on the average for the various indexes. And by the way, if you're interested in me analyzing a particular market, sector, stock, commodity, forex, crypto, I don't care. Email me at info@ersignals.com and we'll see what I can do about it. Next, natural gas, NQ, I'm sorry, NASDAQ. Almost getting to support already. See, it's leading the way down. So I think it's going to be the first one to turn back up again when that happens. So today being Wednesday, sorry. I'm not looking for, that much to the downside. I keep saying that. Next, we're looking at bonds. You would expect bonds to be slipping while the indexes are being pulled down with it at the moment. We have a new low for a couple of weeks plus, just like in the indexes and the bonds. But here we are back up to unchanged, a couple of ticks higher on the day, as a matter of fact. We got nowhere near oversold. We did get to a support area, which looks like it's having some effect. Yesterday, it was the lows. Today, we dropped below it, but sprung right back up again, kind of like pushing a ping pong ball underwater, and letting go and it pops right back. But I gotta think this is not over and that we're probably going to make a little bit lower lows in the bonds. I would suggest 120.20 as a possible downside, and we're at a little bit under 124 and maybe slightly lower than that, but I'm very bullish long-term on interest rate futures. Next is the 10-year notes. We still have the position that we bought at the bottom of the market on the 10-year notes, green, bullish, engulfing. And by the way, I'm going to go back to bonds. What is that? Green, bullish, engulfing, bottom of the market to the exact day in the bonds. Back to 10-year. Doesn't look like it's going to bottom out right away. It looks like it's going to come down a little bit more, probably take a profit in the process. Next, crude. Support area, trying to have a bullish engulfing, but it's not going to turn green because you're not oversold. And it has not had a bullish engulfing yet. But this is a pretty decent rally. You realize we're now above the closing prices for the previous 3 days. And all it has to do is get above yesterday's high, which is not too far away, in order to have that Japanese candlestick buy signal. But it's not one of mine. It's part of my ER signals, not the total part of it. Okay, so maybe this will turn back up now in support and trying very hard to do so. Next, natural gas. Already making minor new highs for about a month. No surprise, got very oversold. It got all the way down on the scale to 6.5 on a daily data chart. That is very oversold. It took weeks for it to get down to that incredibly oversold level. I don't know if this has been this oversold for years. Let me just see real quick here. I'm going back at least to about January of 21, 2 years, and it hasn't even come close to 6. That's how oversold that was. So look at this. Once it broke out to the downside, it started getting oversold. Not unusual, but the fact that it just kept on coming and coming and coming is unusual. And finally, it's turned. So I don't see anything unusual about it coming right back up to this very important resistance level in natural gas and then starting to go right back down again. Wouldn't surprise me at all. By the way, we got the bottom of that crash. We had a few sell signals in the highs here. We got the top of the market to the exact day, August 23rd of 22. That's a whopper. Next chart, heating oil. Bullish engulfing, minor support, still inside this downward slanting wedge, which is a form of a downward slanting channel. And it's also called a downward slanting pennant. they're all about the same thing. The lines are either parallel or not quite parallel. So we're in this formation. We need to break out above this bearish trend line, the top of the pattern. But the problem is, the same time you're doing that, you're in a resistance area. So this is going to be a little bit touchy, maybe short term. But I have to turn a little bit friendly at the moment with a lot of caution, because this resistance it's testing right now could turn it back down. So I'm confused. Forget it. Next. Don't do anything. Gold. Overbought, at resistance, topped out, crashola today. Finally back down to the support area I talked about and my first downside objective, and nosediving into it pretty good. So now there's nothing wrong with it coming all the way down to, say, 2009. You could also be at that trend line in a few days. That's another reason to believe it might turn around 2010, 9, 11 maybe. I have to mention that there's a chance that this trend line I'm a cursor on, and I just put the handles on, little white dots, is a neckline. This could be a shoulder, and that would be the time frame at the end of October, beginning of November, with a bearish engulfing signal on it. Yay. The top of the market has a whopper of my ER sell signals. And now, about the same amount of time to the right of the top relative to the left of the top for the shoulders, you've got another high around the appropriate level. And I think this is a possible neckline. If that's true, this head and shoulder top formation is just about to have a big move down. You measure from the highest high of the pattern, 2152 point whatever, all the way down to the neckline of 1970. And just eyeballing this real quick, it would be down to the bottom of this. It would be back to the lows which we caught on October 6th of 23. Yeah, I think that's not out of the question. That was a great buy signal. That was a great sell signal, by the way, let alone that one recently. Okay, next. Silver. Wow, what a break today. And it nosedived into oversold conditions as a result of that. But look, there's the same situation. We've got this rally, time frame wise, October, November. We've got the top of the market with a bearish engulfing air sell signal to the exact day. We've got another shoulder high a few days ago, maybe, and we've got a neckline. The patterns are very similar. We're trying already to break the neckline. Right now, the last tick is a little bit above it. Possible false breakout, oversold conditions. Maybe it's going to bounce for a few days first and then come down and crash through it. Next stop on the downside, I would call it 21. And it might even be down to 2050. Next, platinum. Overbought, stopped a rally. Not a particularly important resistance level of any kind, but not far from it. Coming back to the support area first. I'm not ruling out moves all the way down to 911, 909, 910, 912, in that range. We've got a whole mess of lows going back to the summer of last year. And it looks very plausible that the market could come down to those price levels. I don't see anything wrong with that. Next, high-grade copper. Slightly bearish. Now, it did break a major trend line and stay well above it for days and days, but it banged into a resistance level. Not quite overbought, came close, turned down. Bouncing off this line would be very interesting, kind of trying to do it today. No signals, not sure which way to go momentarily, but it looks like it could slip off a little bit more, but I'm kind of neutral here. This is between a rock and a hard spot, and there's a couple other markets that are doing the same thing. Next is soybeans. Oversold conditions, but a new low ground since last June. Major top potentials exist here. One has to look at the longer term picture. Now, you know, this is a continuation chart. All the futures are, so I can look at years and years of data. And this support area that soybeans are now well into is extremely wide, top to bottom, And back in July of this last summer, when it broke out to the upside, it went for a while, a week or two or three, and then it tried it again and it failed. Came down, we had a bullish engulfing at the bottom, exactly. Nice rally for a month or more, but that failed. And now we're making new lows again. I've just described a bear trend, at least since last summer. But the problem is the bigger picture represents a whopping big sideways trading range, and the bottom of which, if it's broken, would be tremendously bearish, and that's below 1088. And we're at 12, almost 1280. So we're not anywhere near close to that. But can't help but continue to be bearish. After a small bounce here, we're oversold. So a small bounce in oversold conditions would not be a surprise. Looks like there's a small gap to close also. Yeah, that's perfect too. It's right up against a minor amount of resistance. Next chart. Bean oil. Yesterday, I started screaming bloody murder. We had a bullish engulfing. Maybe it didn't happen by the close. Sorry. But today we see it. Yesterday was an outside up day. Higher high, lower lows, higher close in a oversold condition. And today we came down to my approximate 50%. There's a mathematical formula behind it. Everything you see here on these strategies is coded, and there's no ifs, ands, or buts about it, whether it hits it or not. You're either stopped out or you're not. You're into a trade or you're not. There's no opinion here. This is an automated trading system. We bought almost the exact low of the day in the oil, bean oil. It is now higher than yesterday's high, doing pretty good. I have nothing bad to say here, except it's a bear trend. This thing had a head and shoulder top. We did catch the second high of a double top with a bearish engulfing. It broke out to the downside below the neckline and just simply went down, down, down for a few weeks to 50, which was the minimum downside objective on the pattern. Had a rally, failed, came down, and has just recently made new lows, getting oversold. And so I'm not surprised we're getting a bullish engulfing and a buy signal, but there's a lot of resistance above this market. Am I going to get a huge rally or a little rally? Well, a little rally's already started, but I'm skeptical. Maybe we can get up to 54. I really kind of doubt 56. And the first place to look for trouble is already at, say, 50. And it's not very far away. I don't think this bullish engulfing is going to produce a really great long-term buy signal in the end. More akin to this buy signal we had on October 12th, 3-day, 2-day rally, whatever. And then it turned down after hitting resistance. So next chart. Meal, soybean meal, oversold, trying to reverse. Probably not going to go very far to the upside. Big sideways trading range. So resistance, major resistance, stopped the rally in overbought conditions. We're all the way back down to here now and oversold now for the first time since the top, which was on November 15th. We could have a decent rally. It might even be back up to 399 or so, which isn't that far, 381.20 at the moment. So then it's going to turn down. Next, corn, new lows. Looks like it's just barely missed getting oversold. And we have a, no, actually, did we get oversold? We did not get oversold. So a little rally, yeah, just exactly what it's been doing a couple of weeks ago. A few weeks before that, we caught a modest rally with green on the bottom. So I'm bearish after this little rally. Next tweet, same comments, resistance above, overbought conditions stopped the rally, a little bit of a dip, another attempt at a rally a few days ago, and down we are today to new lows for 2 or 3 weeks. Probably going to dribble off into new low ground again. Notice we caught the top of the market to the exact day with a bearish engulfing ER sell signal at the beginning of the war after a series of lock limit up bid days in a row. That is extremely rare to see. And frankly, I can't remember this happening except for when I started the business in 71-2-3, the Russian grain deal caused the commodity grain markets in particular, and a lot of others, to go screaming higher, very similar to what we just saw last March of 22. Next, cattle. We're still long from a buy signal on 1215. Inside day today, doji, not going anywhere momentarily. Not stopped out as yet. Stop is probably going to start to come up here, but not quite yet. Friendly at the moment. Maybe we'll get a rally all the way up to 182. Not really holding my breath for that, but we'll see. But I can't help to be friendly. Oversold conditions in a support area, turned it, and a couple of days after that, the market ends up giving me a buy signal, much like the one we got in March of 23, which ended up being a whopper of a long-term buy signal. Okay, modestly friendly for another, I don't know, 2, 3, 4 weeks. Hogs, oversold yesterday and today, trying to turn up. Actually, a little bit higher on the day right now after making a minor new low. The lows are lower than previous lows. The highs are lower than previous highs. That basically is a definition of a downtrend. It's been going on since July, half a year, a decent amount of time. We've got some support under the market. What can I expect? A rally. But the trend, intermediate to longer term, is pretty much obviously down. Where we're going to turn back down again, maybe pretty soon at around 68 or a touch higher, 60, 70, 68 to 70, that resistance area. Next chart, OJ. We caught a whopping great trade. I believe it was worth around 13 grand per contract when we got a bearish engulfing sell signal on November 21, and it just plain crashed. That turned out to be the head of a head and shoulder top formation. I tried to pinpoint the exact turning point in the middle of the circle. I was a day too late. It topped out one day earlier than expected, and I was a little bit too high in price. Well, it still worked like crazy. From the day it broke out, there was absolutely no up closing prices until yesterday. And look at the follow through we're getting today, but we are now out of the trade. It was a great trade, got no problem. We're going to rally maybe back up to the neckline at the very most. I doubt that. The rally might get up to only 341.70, where it's very close to already. In just 2 days, it's rallied more than the last previous about 6 days down. That's not surprising considering the oversold condition and the pattern that we're dealing with. Now remember, the head and shoulder top still has a downside objective of 287.95-ish. I'll call it 288, and I think we're going to get there. So the question is, where is this little bounce going to stop and start to turn down to my objective or lower? I'm keeping a close eye on it. I don't think it's going to go much further. As a matter of fact, there's also a little gap to close right here at 341.22. Oh, that's it. And we came pretty close already this morning. So I'm calling 341.22 a possible top, and it might be today or tomorrow. And maybe a little bit higher. There's also a small gap at 350.92. Call it 351. Next chart, cocoa. Looks like we're trying to roll over. Nothing particularly aggressive here. Very neutral RSI. Doji sideways trading range today. Nothing going on. It just might, I don't know. No comment. I'm going to pass. Coffee. Support trying to hold like 2 days ago. Kind of have to pass on this one also. Because of the support area, I would favor slightly it turning back up again, but I don't see it happening in the price action at this particular point. Next chart is sugar, and we're almost at the end. Doji inside, obviously bearish, longer term. Could we have a little bit more of a rally? Yeah, maybe. Is it going to stop? Yes, because there's too much resistance above, and I don't see any big accumulation type of pattern, which would be a big broad double bottom or head and shoulder or some sideways trading range of some sort. It ain't happening. Bearish. Cotton, rocking a hard spot, and a smaller trading range rocking a hard spot over the last 2 months. So this is going to break out to the upside, which is a very minor breakout, and maybe get back up to 89, or it's going to fall apart all of a sudden and break out to the downside and then collapse to at least 68, and I don't know which. I got to wait. Back to the E-mini, a little bit of a bounce. Let's check the short-term charts super quick here, and I'm going to go to a modest rally on the 5-minute spider here on this particular chart. Not as significant or as good on the March futures relative to the nighttime price range. The DIA 5-minute has a decent rally going. It's better than the opening, which was quite a bit lower. And no new highs on anything for the day so far. And there's the Qs kind of in the middle. I think we could break down again and make new lows again. And if we do in these indexes, it could drop very quickly and sharply because some of them are making new lows for over 2.5 weeks. You have a great trading day, profitable trading to you. See you tomorrow.